Hello, welcome again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Monday, November 30th, 2020, last trading day of November. And boy, has it been an amazing month, record-breaking for the markets. Let's get into the topics of the day, and thanks for watching. Our first topic of the day, this has been a November to remember. And of course, it's 2020. As I report to you every single day, for the most part, 2020 is just that year that I think we all want to just move along, right? Because it just keeps getting completely more unpredictable as the minute and days and months continue to go. November was nothing less than a disappointment in that department, simply because we still have a question mark as it relates to the presidential outcome. Yes, the press has certified it, but now we're listening to the news as the state electorates and so on and so forth. Anyway, long story short, next month of December, I think they might settle that up. But the reality is, as I said before, 2020 is nothing less than disappointment in terms of predictability. But for the most part, markets have done exceedingly well. Let's look at the numbers. I mean, this was the best month for the Dow Jones Industrial Average. As we speak, markets are down right now, but ultimately, I think they're going to settle just above around 12% for 1 month. And the Dow, as it relates just for the Dow itself, in terms of being up percentage terms, that hasn't happened since January 1987. Tremendous, uncertainty was past us, if you will, in the presidential election. Maybe not, but markets had a big relief rally. Why was that? That's because the blue wave never materialized, and ultimately, it doesn't matter what partisanship you are in terms of where you see your politics. One party that controls red or blue in terms of the Congress as well as the presidency is never a good thing, because ultimately they can do whatever they want for the most part in terms of tax and spend. So markets were fearful of a blue wave. They ultimately took a relief rally, and that was a huge relief rally. We're seeing the likes of even on the S&P 500 around a 10 to 11%. Depending upon how we close this afternoon, in terms of up for the S&P 500. And that hasn't happened since this back April when we got a relief rally, earlier this year on the S&P. So tremendous movement in the indices, tremendous unpredictability. That's sort of been the consistent theme is, always expect the unexpected for 2020. So this has been a November to remember. And let's get into the 3 things that the market's actually paying attention to and what really matters most and what's driving the markets. So our 3 updates as to today's market, what's driving the market. I don't just mean today, specifically Monday, the 30th of November. I'm talking about like the next couple of trading weeks and months ahead, ultimately. And the 3 things that are driving this market, why the markets had such a successful November, let's see if it carries over in December. But here are the things that the markets are paying attention to. So therefore, we are here at Blanke Schein Wealth Management, as you should be too, at home. So number 1 is the vaccine. So we've had our 3rd announcement, Monday announcements of a vaccine. The good news is they're all plus 90% efficacy. And now the action plan is how it's going to be rolled out, first responders and to who actually gets the vaccine. Ultimately, a lot of the medical reporting is saying that by halftime next year or by the end of the second quarter, we should ultimately see about 50 million Americans have already taken the vaccine. So ultimately, that really dictates to why markets pay attention to is the economic recovery, right? So much discounting has happened because there wouldn't be an end in sight as to a vaccine. Well, now a vaccine, you got multiple shots on goal as we described, and we'll see how this works and the implementation to execution. So something can happen ultimately in terms of how that gets rolled out. But right now, markets are paying attention to this, and that's first and foremost. Number 2 is the sort of the backstop, if you will. And that happened since early March or late March, early April, which was the CARES Act 2.0 by Congress, but more importantly, continued central bank support. What that means is the Federal Reserve. Now, Powell has a 2-day meeting tomorrow, the next day of this week. So he released the minutes last week. What he says is what we're going to have to pay attention to. So that's really critical as to the direction, both short-term, long-term, as to what the Federal Reserve Chairman Jerome Powell says in this 2-day meeting starting tomorrow, the next day. And then finally, continued investor conditioning. Ultimately, markets are expecting more CARES Act 2.0 from Congress. That's not going to happen until the second quarter because right now we have a lame dunk Congress as we go through a electoral transition. And we still don't know where the Senate is because that could change some things right now. So we have to wait and see how the Georgia races, those 2 Senate seats, ultimately determine the Senate sort of outcome that could still be, all Democrat sort of President, House, and Senate come early January. So that's still on there. But ultimately, once we get past there, really the wisdom is that we're probably going to see a divided Congress. At least that's where markets are positioning right now. I was going to try and say the betting money is on a divided Congress right now. So right here, we're going to see additional stimulus that's going to continue in the hands of investors and the hands of consumers, which is very much needed by small businesses. Remember, support your small businesses because they need it, especially these days as we're trying to get ready for the holidays. Think small business when you do your sort of Friday to Monday purchases or cyber shopping this week as well. So if you're with me on last week, we had Jack Schein give us the update. We talked about the impact as to Cyber Monday and Black Friday, if you will. We gave a little history of Black Friday, ultimately what the consumers in the United States spend and what that relationship is to our GDP. And so we had some guesstimation in terms of numbers. Now we have actual real numbers, and it's outstanding. It's unbelievable. $9 billion was spent on Friday, so everyone was really busy at home. And ultimately today on Cyber Monday, it's estimated at $15 billion. Not quite a double of what Friday is, but ultimately it is tremendous, more than ever. Now, let's put that into context real quick. The last 10 years, online sales have seen an impact in an increase year over year just by 1% per year over the last 10 years consistently. So basically, online shopping has increased by 1% per year. This week, it has increased year to date, including today, from basically since the pandemic, 15% year over year in terms of growth of online sales. That is absolutely unbelievable. So in the last 9 months, we basically pulled forward 15 years, if you think about it, because it's been a 1% per year growth rate. Now we pulled forward 15 years of growth in the last 9 months, which is absolutely tremendous. Where the consumers are getting this money, no one knows because there's a tale of two economies, right? So those companies that are public have the access to not only the public markets, but also lending and all these other facilities to keep their doors open. The big box retailers think about that. Plus these strategies, the digital strategies to attract all of these dollars from the consumers. Remember, we're 2/3 driven by the U.S. economy, by the U.S. consumer. So that's very important to see the impact of the U.S. consumer as it relates to the healthy aspect of the U.S. economy. But the U.S. economy is obviously healthier than ever. There's some subsectors, right? The leisure, the entertainment, the travel industry that are in small businesses, bars and salons and a few others that are just being absolutely decimated right now. So they need our attention by Congress sooner than later. They need our support from you and me at home to support local small businesses, the restaurants that are still trying to survive. We do that as a family here locally to support all of those restaurants that are trying to make it, those family-owned restaurants that we want to see not only now stay open, but get through this period of time as we see the vaccine hopefully work its way in sooner than later. But the ultimate reality is that Cyber Monday and Black Friday blew expectations away. Again, a November to remember, if you will, and way beyond what any analyst has predicted. That then works its way into the consumer or the corporate balance sheets, ultimately profitability. That works its way into markets, will be driven higher ultimately because the consumption will make its way into balance sheets going forward, and the health of the U.S. consumer is very strong, which is a good sign to see. So there's some subsectors of the economy that are suffering, and there's those that are capitalizing on this new digital age and era. So we're seeing the empirical evidence being right before our eyes. So thanks for taking the time out. Get back to your Cyber Monday deals, and we'll see you again tomorrow. Thanks for watching.